Welcome back. You're watching The Money Show on ET. Let's talk about the new changes that the insurance regulator has brought about when it comes to motor general insurance. And believe me, there's not just one or two. There are several ways in which your insurance for your car is about to change. To discuss all of these in detail, how it will impact your premium amounts, your sum assured, and all the other payment options, I have with me Nirmal Bhattacharya, the head underwriter for Universal Sompo General Insurance. Mr. Bhattacharya, thank you for joining us on The Money Show. Let's take each of these norms one by one, and I want to start off with the most complicated one, or at least according to me, that's age-based depreciation norms. Now, from what I understand and the little that I know about, having a motor insurance, the minute I roll out my car from the showroom, the value of my car falls by 10%, 15% or whatever. How will these new age depreciation essentially change my sum assured, my premium payments, etc.?
First of all, thank you, Mubina, for calling me in this channel. Motor insurance, we have been underwriting for ages on the basis of motor tariff, which has been, binding on all the non-life insurers operating in Indian market. So depreciation, as you were asking, is a very important, component for determining the sum insured, and which was dependent on the age of the vehicle. Till now, there has been a lot of complicated depreciation structure, which has been, a working group has been formed at the insurance regulator, who has been, trying very hard to simplify the whole depreciation structure. Depreciation has been linked with the age of the vehicle, percentage-wise. For example, if the vehicle was within 6 months, then it is 5%, so on and so forth, 10%, 20%, 30%. So what they have done is, now they have extended the age of the vehicles to 7 years. Earlier, the depreciation was up to 5 years. Okay. Now they have extended it to 7 years, and most of the vehicles are falling with that category. Beyond 7 years, it's difficult. So earlier, what was happening was, beyond 5 years, it was at the discretion of the insurance companies to fix the depreciation. So a lot of subjectivity was there. Now the insurance regulator wants to remove the subjectivity with regard to depreciation, and they want to bring objectivity, so that there is no, complications, there is no ambiguity, there is no dispute in the event of a claim. So everything is structured. So insured is also happy, insurance company is also happy. It's a win-win sort of. So new recommendations which have been given by the working group, if it is implemented, it will make both the lives of insurance company and the insured quite easy and comfortable.
Okay, so it's objective now, just based on pure mathematics, basically.
Absolutely.
There's no room for subjectivity. So during claims, it's a much easier process now. Now, speaking of claims, there's also, I think, an exposure draft to revisit the own damage product structure. So if you could just talk about what exactly is own damage and what are the changes that are now being mulled upon?
Yeah, I would just throw some light on the working group, what was the rationale behind it. As I already told you, that motor insurance was governed by Indian motor tariff for years together now. Now it was last revised in the year 2002, almost 17 years back. But with the advent of new technology, new generation vehicles, electric vehicles, now new technology driven underwriting. So all these have prompted the insurance regulator to form a working group, which has gone into the entire, landscape of the product, motor product, and has suggested some recommendations with regard to motor on damage policy. Now, there has been a very important reform last year. Till last year, there was no provision to issue a standalone motor own damage cover. It was to be clubbed with the liability.
Overall,
yes, it was to be clubbed with the liability policy, and then it has to be issued as a comprehensive cover. But from last year, regulator has permitted all the insurance companies to issue the standalone motor own damage cover. Okay, that has already been introduced.
So what all does that cover? If I take only a standalone, own damage cover?
That is only covering the damage to your motor vehicle. Not to the damage to the third party after an accident.
Okay.
So you are covering only the own damage of that particular vehicle insured.
Okay.
So this policy is covering the damage of the vehicle, physical damage of the vehicle,
Okay.
and not the third party damage.
Understood.
That is the standalone own damage. Now this working group has come out with certain recommendations which have not been implemented as yet. It has been, circulated as an exposure draft to all the insurance companies, all the general insurance companies, for their observations and comments. And after they give their observations and comments, these will be again reviewed by the regulator, and then they will finally conclude that what should be implemented. And once they agree, once they freeze all those recommendations, that will be converted into a circular and it will be implemented. As of now, it is in the recommendation stage, and we are going to give our observations and comments.
Okay.
Very important, reforms which have been suggested for this material own damage cover is depreciation table has been changed.
Yeah.
Earlier it was for 5 years, as I already told you. Now it is for 7 years.
Okay.
For partial claims, partial claims may lead to damage of various parts. It may be plastic parts, it may be nylon parts, it may be glass parts, so on and so forth. So, and they were having differential depreciation structures.
Right.
So again, that was leading to subjectivity and ambiguity and a lot of disputes in the
Confusion,
event
yeah.
of a claim. So now the working group has suggested that we should make it more objective. So what they have done is they have converted it into vehicle age-based depreciation for all the parts. Okay, and they have actually introduced an uniformity in the depreciation structure for all the parts. They are not differentiating from one part to another. So that would make again the life of both insurance company and the insured more comfortable, and there will be lot of reduction in the disputes, unnecessary disputes, I will tell you.
Okay.
So this is one. Another is, no claim bonus. No
that
claim
was
bonus
going
is
to be my
very,
next
very
question,
important,
yeah.
because that is an incentive for the insured for not lodging a claim.
Yeah.
So NCB grid has been changed
Okay.
as per this recommendation.
Okay.
Earlier, you can have 50%, that is the highest no claim bonus you can
bonus.
have in 5 years.
Yeah.
Now they have recommended that you can get it within 4 years if it is claim free.
So earlier.
Early, yeah.
Okay.
Yeah.
So again, a benefit for the insurer.
Benefit.
Insured, sorry.
A benefit to the insured, yeah.
Okay.
Yeah, yeah.
All right. So the NCB slab as well has been sort of, instead of 5 years, now 4 years if you do not claim, the money from the insurance company, your no claim bonus as much as 50% can be as early as 4 years as opposed to 5 years. Okay. And now, of course, I think something that is very interesting is you will have to pay that much premium as opposed to how badly you drive or how well you drive.
Yeah. This is a very important one.
So
yeah.
customizable premium, and I think this may be an incentive finally for, I suppose, individuals to stop rash driving. If you could shed some light on that.
Yeah, this is very interesting. You have rightly asked this. This is one of the most modern, most contemporary way of underwriting a motor risk, that which is dependent on the driver's behavior. But there are a lot of challenges also. It is not that easy. In overseas countries, this has been
Implemented,
This
yeah.
has already been implemented long back. But in India, we are still in the process, because this type of underwriting requires a chip,
Yes.
an equipment which is to be installed in the vehicle itself.
Yeah.
Okay, and that is pretty costly. Now, challenge is whether that cost is to be borne by the insured or the insurance company. So,
yeah.
because if it is borne by the insured, then premium becomes higher.
Yeah.
And if it has to be borne by the insurer, insurance company may not be having any margin.
They may not want to rely as well on it, maybe.
Absolutely. So solution is that the manufacturer of the vehicle, if they can pass it as an accessory, and then we can go for this telematics. But again, there is a challenge that who will manage the data. The insurance regulator has got a data repository which is known as IIBI.
Yes.
So they have to play a major and vital role
Okay.
to collate the data. Then there is some privacy part is also there.
So that means it's going to take a little time, I suppose.
It will take a lot of time.
Okay.
All these issues have to be resolved.
All
They
right.
have, this is kickstart.
Yes,
I will say
yes.
this is a kickstart, but it's a very good initiative
Yes,
taken
true.
by the regulator.
True.
But still, I feel that this is the future.
Yes. And it's very logical as well.
It's
I
very
mean, if
logical.
you're a rash driver, you have to pay more.
Then you can
premium. Yes.
differentiate between a good driver and a bad driver, and accordingly you can change your premium.
Premium, true.
Yeah,
true.
so it will be a risk-based underwriting rather than a traditional underwriting we are doing now.
I mean, if a life insurance can be that way, if you're an adventure junkie or you like to take
Absolutely.
it simply, why not a car insurance?
Absolutely.
Okay, Mr. Bhattacharya, thank you so much for very briefly explaining all these new laws that have come in by the IRDAI. They've been very active of late for all sorts of insurance norms.